Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Freshagenda, Ever.Ag's Global Insights team. And Steve, we're here from beautiful Copenhagen, although not sunny Copenhagen today. It's very wet.
Europe's having relieving rain, so it's probably a good thing, but not for us today.
No, but we're here with some market updates, including the latest Pulse results. We're going to talk a little bit about what we're up to over here this week, and then, of course, chat of the week.
Okay, it's a bit going on in the market.
Yeah, and just starting with New Zealand. New Zealand whole milk powder futures were softer than a week ago, just off the back of that GDT event last week and leading into this week's Pulse. And the trend continued, Steve. The result will add a lot of pressure to forward prices from here on in. Whole milk powder regular fell $150 a tonne, or 3.6% on last week's auction result, number 381, and it was 3.7% down on the previous Pulse. So a bit more action in that curve this week, Steve.
Skim milk powder has also been falling, and will probably take a further knock after this week's Pulse as well, because it tumbled. Medium heat from New Zealand fell 4.4%, about $100 from last week's auction, and not as bad, but from the previous Pulse, which was a little bit higher than the auction. That landed with a price of $27.25 per tonne. Arla sold on Pulse this time and achieved a price $125 below that at $2,600 a tonne. So reading these results gets more complex now because we've got another seller and a regional differentiation in price. In Europe, in the background last week, Joe, liquids and fats continued to move higher in spot prices.
Yeah, what's interesting though, Steve, short-term butter futures were actually weaker into Q4 25, losing almost 2% on the August and September contracts. So we're just starting to hear from some traders a little bit of buyer resistance emerging. We know that those margins in retail are very thin, particularly in Germany. We had a look at that a week or so back. So just a bit of resistance coming in to play, perhaps.
And maybe, Joe, the fact that there has been quite a bit of rainfall and the resistance might be, well, do we actually need to be paying this much if things come off? But it'd be interesting to watch how the spot markets perform in the next couple of weeks.
Sure. And across to skim milk powder futures on the AX, skim milk powder went the other way and firmed through Q4. Very interesting bump forming there, Steve.
The bumps come back.
Yeah.
But at least in the shorter term, it created a bridge, not really over those funny price signals.
Yes.
Okay. Over in the US, short-term cheese markets in the US also weakened. The second contract dropped 4% on the week, or nearly $200 a tonne. Spot cheddar blocks lost close to $200 last week as well, but caught $50 of that back in trading yesterday. So the volatility we've been talking about for a while is certainly happening, isn't it? There's, the mixed signals about how much availability is coming. The butter market was also a little bit weaker. That's despite the fact that the US spot market picked up in the past week. So mixed signals everywhere.
Yeah, and just looking at non-fat dry milk, we expected that to take a further dip after the drop in Pulse. Not much movement there over the last week, Steve.
Yeah.
Now, just looking at where that leaves us with these global comparatives, we're very bunched up in skim milk powder, Steve. All of those regional curves very close together now, and GDT is sort of picking a path in the middle there.
Bunched up and flat.
Absolutely. And butter, the exact opposite. Still that spread, a little bit of convergence there with CME coming up a little, but still a long way apart, Steve.
And in terms of cheese, again, back to this comparison between the apparent forward values, I didn't put the actual value lines there, but when we compare what our fair value of mozzarella is based on fat and protein in Europe against the US forward prices for cheddar, the gap's widened a bit, Joe. That's the euro value, and let's put it into US cents per pound. It's back above 25 out in, for Q4, we get out there to December, we see that value gap move out a bit. So whether that encourages more export,
is it enough?
Is it enough?
That's the big question. Now, Steve, we are in Copenhagen this week because you are speaking at the IDF General Assembly on
Yes.
Friday. And so we thought we'd give a little teaser, a sneak peek of what you'll be covering.
I've got the graveyard shift, Joe. I've got the last session.
There might be nobody there.
Well, I've spoken to a few people today and said they promise they will stay. So we'll see. Look, I've got 4 main topics, Joe, I'm going to be talking about with things that flow from them to wrap the session. The changing global trade landscape. There is quite a lot going on in that to discuss the importance of developing markets.
Yeah, and it's sort of sobering every now and again for our industry. Almost 3/4 of dairy trade is into developing markets. So they're very important in terms of dairy trade and how high commodity values can actually move, Steve.
Yeah. So I'm going to talk about how the makeup of this is changing shape. You see there how, what comprises that developed world trade in terms of regions. This is in milk solids equivalent.
Mm-hmm.
Who's got the greatest exposure? Where the growth is the strongest? That's a couple of things I'll be looking at.
Mm-hmm. Yeah, these regions also have the most to lose from, the sort of nascent trade wars that are on again and off again at the moment. Obviously, direct impacts if the reciprocal tariffs deadline's still a month away on coming to a deal on those with the US administration, but also the indirect impacts of a escalating trade war with the US and China on that region, which is, a lot of that Southeast Asian region is a big part of that trade, Steve.
Yeah. I'm going to talk about contestable cheese markets, a favourite topic of ours, the winners and losers. You see there with the exposures to those contestable markets. Obviously, some exporters have got a huge exposure. They mean everything to New Zealand and Australia, less so to the other exporters, but, not a lot of change in the exposure there. But given the changes in New Zealand and US supply, in particular product mix considerations, this is going to be a pretty important focus from here.
Sure.
I'm then going to talk about what's driving New Zealand's product mix choices as we look into changing marketplace and availability from other players and the changing demand from China, which is not getting any better. But it's going to look at, how New Zealand's using milk solids based on that product mix, the change in product mix we've seen through trade. And what does it tell us about the outlook?
Interesting stuff.
Chart of the week, Joe. What did you find?
Yeah, look, bring us home with some US trade data that came out late last week, Steve. And just given a lot of the talk around the US markets has been about a whole lot more export activity. So this April data has been really eagerly awaited. And we've added up. Here's a little top line summary. 2.9% growth in milk solids equivalent. Perhaps a little bit less than people were expecting. Butter trade has dominated that percentage increase, but obviously off a very low base. But there's been a lot of talk about increased butter trade. The growth was 5,800 tonnes, more in AMF than butter, in fact. And butter trade for April was actually smaller than the preceding months of February and March. So perhaps not quite what people were expecting. Overall fats trade is actually similar to the previous 2 months. So, not a huge change there month on month, even though the year-on-year change looks huge. So if we take out the butter, we can see what's happened in the more important categories. Cheese trade probably the most disappointing, again, after a lot of talk about export deals being done. Grew 7% year-on-year gains, but that's actually just 3,400 tonnes. Now, most of that growth was in contestable markets, but for the same month of April, New Zealand actually added 9,000 additional tonnes into those same markets. So New Zealand's actually been a bit more successful there, at least for that month. Have a look at those high pro MPC and WPC figures though, Steve. Still very good growth there. And lactose looks to have picked up a little bit of ground after fairly low growth in the preceding months.
So where did the US send it, Joe?
Yeah, well, it's probably not a huge surprise, but Mexico and Canada explain just about all the growth with a decent contribution from Central America. And that's really offset the ground lost in Southeast Asia for US exporters. So some interesting, if perhaps slightly underwhelming figures there, Steve.
Yeah, concentrated, don't you think?
Very concentrated, yes.
And with a lot at stake, given the trade discussion.
Sure.
Okay. Well, that's all from us this week. Next week will be much closer to home, but in the meantime, we'll gather up a lot of stuff that we'll be talking about next week. Hope you come back. Thank you.